Is it a matter of the banks becoming that much stronger, or is there some effect already of the Trump administration's sort of influence on deregulation? We're going to hear testimony today, for example, from Jerome Powell of the Fed, which is going to say we don't have to have quite so much Volcker, thank you very much, and we can ease up on some of the stress tests.
I think the first reaction following the crisis was more capital to the banks. That capital has gone into the banks, and it's stayed there for the biggest banks. It really hasn't come out. I think most industry observers, and I believe that there's a lot of surplus capital in these banks. The next question is the regulatory machinery in Washington is still stuck in post-crisis mode. There really hasn't been any easing, and I don't think any real fair examination of all these changes that were made. I think that examination is just happening now. I think that Treasury report that came out last week was a great roadmap for what can be discussed and what amendments could be made going forward. And we do have Jay Powell speaking to the Senate today, and I think you're going to hear more about it. And I don't think anybody wants reckless behavior or wants to take a risk with the American banking system. The question is, can you just move the pendulum a little bit and get it to a more neutral position? I'm glad you brought that up, because my question was, is this the worst stress test that we're going to see? Like the most strenuous stress test? No, actually, it's going the other way. I would give the Fed credit that they've listened to the industry's complaints, and a lot of the prior stress tests were maybe even a little bit too stringent and really in some ways weren't how banks would react to a crisis. And the Fed has shown a little bit of modification. And I understand from the Fed, Jay Powell said, who's now the governor in charge of bank supervision, that the Fed's going to be more transparent, which is a very good move.